We're now in the grips of an inflation scare that has put a chokehold on the growth stocks, and it's been a nightmare for tech. This morning, it felt like we'd have still yet another ugly session for tech. Then we got this reprieve when interest rates took a breather for an ugly close, with the Dow ultimately finishing down 470 points. S&P declining 0.48%. NASDAQ did manage to rebound 0.56%, and that is important. See, not everything can rally. When rates tumble, like today, the big industrials lose their momentum, hence the decline in the Dow. But at least the cloud, the semis, the cybersecurity stocks could climb out of the hole that they're in and lead the NASDAQ into a rare patch of green. In other words, we rolled back the reflation trade for another day. However, after a crazy year full of unprecedented action, we're finally dealing with something normal here. I've gone over the last half dozen of these inflation scares, and I think the closest analog is the one we got from December 2015 through February 2016. Back then, the economy was heating up. Our economy is heating up. Our previous Fed chief, now Treasury Secretary Janet Yellen, let us know that it was time. The economy was too strong. It had to raise rates. Had to raise the federal funds rate. Then as now, the most highly valued stocks, the ones that trade on their sales, not on their earnings, got absolutely annihilated for weeks on end. Emphasis on weeks. And remember, we're only like week 2. Of course, there's a big difference. Our current Fed chief, Jay Powell, has decided to upend more than 40 years of monetary policy. Ever since the late 70s, the Fed has been ruthless about crushing inflation, even if they have to cause the occasional recession in the process. But Jay Powell believes we're underestimating the risks of high unemployment and overestimating the risks of inflation. That was true even before the pandemic, and it's doubly true now. To a lot of people on Wall Street, though, that's just heresy. They don't trust the man. See, you got bond sellers all over the place betting that Powell will have to change his mind because the economy is going to get strong. As they see it, we're about to get a huge stimulus package that will hit right as America reopens for business because of the vaccines. So they think the economy must overheat. Therefore, we must have inflation, serious inflation. And inflation is a nightmare for people who own bonds. I mean, who wants a piece of paper that pays 1.5% when inflation could break 2%? You're losing every day. And that's why these people have been dumping bonds, and their wholesale selling always smashes the stock market. Remember, stocks are valued based on their future earning streams, and inflation erodes the value of these future earnings.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.